Hi, Tori Agler with McIlvaney Precious Metals with your August recap. The volatility has continued. It's been quite the month. Happy end of summer, I guess you'd say, and in the beginning of fall. But I want to, as always, share my screen here with you so that I can show you some of these images and run through exactly what has transpired, not only this month, but a quick year-to-date update with you as well. All this being said, gold up 3.4% in terms of the volatility. We'll get into some of the details, but a really fun, active price chart here. And we'll get into lows and highs here in a little bit. But looking over at the silver one, a little bit more of a flat month, only up 0.7%, despite, again, a lot of volatility and fun action. Platinum actually was down. Okay, so we're down 4.5% in August in platinum. And palladium is starting to show a little bit of life again after dropping below the platinum price. It's up 3.8% in August. Here's a little August high, August low chart, this little grid. So the high, we did set an all-time high in gold in August, $2,532. So new uncharted waters, fun territory to be in. And we're just a little below that now as I record. The low was 2,363, would have been an excellent entry point for the month of August if you could time it right. But look at the volatility. We saw a 7% price swing in August for gold. We saw a 13% price swing for silver. So even though it finished relatively flat, it saw a low of 26.40 and a high of $30.20. Platinum, high of 981, low of 904, which is an 8% volatility swing. But palladium takes the cake at 17%, a low of $830, but it rallied into the end of the month. We did see a high of 999, just almost getting to $1,000. So here's the monthly recap as well as an up-to-date on where we stand. Gold up again 3.4%. The fun part is that's the seventh straight month of a higher close for gold, and that's really fun. We'll see if we can do the same thing in September. Seasonal bias would say probably not. September tends to be a little bit of a quieter month, much like June does. But we'll see what happens. Year to date, though, gold is up 21% very quietly. And year over year, meaning the last 12 months rolling, gold's up 30%. And that's outperforming all major indices. They're the ones that get all the love and attention, but here's gold doing it very quietly off the radar. Look at silver up 0.7% again for the month. Year to date, same as gold, 21%. Also same as gold, 30% on the 12-month year over year. And again, very, very quietly, also obviously as a result of that, outperforming all major indices. We'll keep that going. Platinum, again, I talked about the fact that it was down for the month, down 4.5%, but it's actually down for the year. You'll see here down 6.5% year to date. August, palladium up 3.8%. We talked about it narrowing the gap. It actually was below the platinum price, caught it again, and now has climbed just a little bit over that, but they're essentially at parity. But year to date, palladium still the biggest loser. We have not positioned into palladium yet this year, but it's down 12%. Now, a lot of questions on where's the gold price going to go. Okay. And I'm just going to focus on that right now, just because of all the underlying fundamentals. We lean towards a pause in September, but a stronger fall. Okay. You tend to have a stronger second half of the year in the gold price from a seasonal trend standpoint, but also around this turn of the year, you tend to get some strength in the price, especially in October, November. So we'll see what the end of the month brings with my next report. But here we see that if things are allowed to run and we do get rate cuts, and the dollar continues its downtrend, then you could see gold go to 2,670 or so, or break out and go up to the 2,750. Does that happen before the end of the year? Not necessarily, but I do feel good about that ultimately in the next 6 to 9 months of seeing those types of prices. Where would it pull back to? Again, with us being right at 2,500 or so at the close of the month, I'm looking at these Fibonacci retracement levels, 2,480. Which we've come down here and hit twice just recently here in the first couple of days of September. The 618 Fibonacci retracement, 2,430 or so. So again, those would be great entry points, buying those dips if September gives us that gift, that opportunity. So what's transpired in the gold to silver ratio? That's something that we follow closely. That has climbed. We got as low as 72 at the start of this cycle, but in a short period of time, we went from about 84 to 89 again. And we thought we were going to hit 90, didn't quite get there. That's a major entry point for silver. But all that being said, here we sit around 88 at the close of the month. And if this continues to climb, there may be an exit out of gold into silver. Nothing to do at this point from silver into gold. We're not going the other direction yet. Why has the gold price action occurred? A lot of it has to do with the dollar index. So look at this downward trend in the DXY, or the US dollar index. This is a representation of relative dollar strength. So as the dollar drops, gold tends to climb. And as you saw us close off of the high end gold, it's the inverse relationship here with the dollar rallying into the end of the month, coming up about 1.2 points on the dollar index. So all eyes on the US dollar and weak dollar policy with rate cuts. We'll see if this continues this downward trend and we break below that 100.5 support level. Now, where is that if we zoom out? Looking back at this chart again, looking all the way back here, 2021, after COVID and everything else, and the US dollar index was down in the low 90s. I do think we can return there with continued weak dollar policy and increased debt. But this channel is very wide, 100 to 107.5. If we continue bouncing in this range, that would make some sense, but we're looking for a breakout below that. And if so, we'll likely fill this gap down below here. The 10-year treasury, there's two charts I want to close with. One is the treasury yield. So the treasury yields are starting to drop, and that's actually strong for gold. Usually gold and treasury yields will move in opposite directions. So the 10-year yield is down 3.6%. You hear mortgage rates declining, you hear interest rates declining, and this is an indication of that. So this is a good chart to show, but also we've talked about a recession sign being the inverted yield curve, meaning the 2-year treasury is giving you a better return on your investment than the 10-year treasury. So for a shorter period of time, you get a better return. Of course, people are going to be buying those 2 years. Well, what we saw is this is the deepest inversion in very, very long time, going back more than 40 years that we've seen. Okay, the gray shaded line is very, very key because we've talked about this being a recessionary concern or an indication that we're entering recession. And you'll see here, the last time we had those yield curve inversions, a recession did set in, even though they reverted back and the 10-year started paying more than the 2-year. As I record, that's now the case. We're crossing this line. So there's going to be a lot of attention on this and see what happens. But again, the indications are that we're headed for a deepening recession, and that's why the Federal Reserve is going to be motivated to cut rates. So that's it for your August recap for precious metals. I do want to point you to this website here, silvergoldinsights.com. You'll see some resources there, some videos of mine where it answers some of your basic questions on adding to ounces and the different vehicles through which you can invest. As always, please give me a call at 866-211-8972. Talk to me, Eric, or Deanna. We'd be happy to assist you. And as always, we're just honored to be your advisors and resources for all things precious metals.